If you missed NVIDIA, don't make the same mistake twice. Because right now, Wall Street is pouring billions of dollars into one industry that could completely change the global economy. Artificial intelligence. And while most people are busy chasing random AI stocks hoping to find the next NVIDIA, smart investors are quietly buying entire AI ecosystems through ETFs. Today I'm going to show you the AI ETF that I believe could become one of the biggest wealth-building opportunities of this decade. And honestly, most people still have no idea how early we are. My name is Nolan Goa. My students call me Professor G, and I created this channel to make investing simplified. Remember, all investing carries risk. This is not financial advice, and you should always do your own research. Now let's get started. Why AI is just beginning. Most people think AI already peaked. But in reality, we're probably still at the beginning of the biggest technological revolution since the internet. Right now AI is being integrated into healthcare, cybersecurity, robotics, self-driving vehicles, military systems, banking, software development, and even scientific discovery. The largest companies on Earth are spending hundreds of billions of dollars building AI infrastructure. Microsoft, Google, Amazon, Meta, NVIDIA. This is becoming an arms race. And history shows that during technological revolutions, the biggest money is often made by investing in the infrastructure powering the boom. Not just one company. The entire ecosystem. That's why AI ETFs are becoming so powerful. Instead of gambling on one stock, you can own dozens of companies benefiting from AI growth at the same time. And we've already seen how successful this strategy can be. If you had simply bought semiconductor ETFs years ago instead of trying to predict the next big chip stock, you still would have massively outperformed the market. Now AI may create the next wave of massive winners. ETF 1, SMH. The first ETF is the VanEck Semiconductor ETF, ticker SMH. And honestly, this might be the single most important ETF in the entire AI revolution. Because without semiconductors, AI does not exist. Every chatbot, every AI image generator, every large language model, every AI data center, all of it depends on advanced chips. And demand is exploding. This ETF includes companies like NVIDIA, Taiwan Semiconductor, Broadcom, AMD, Qualcomm, and ASML. These are the companies building the backbone of artificial intelligence. Over the last several years, SMH has delivered massive returns. But many analysts believe the AI infrastructure boom is still in the early stages. As AI models become larger and more powerful, demand for advanced chips could continue rising for years. That's exactly why semiconductor companies remain so important. ETF 2, VGT. The next ETF is VGT, the Vanguard Information Technology ETF. This is a safer and more diversified way to invest in AI. The ETF includes technology giants like Apple, Microsoft, NVIDIA, Oracle, Salesforce, and Adobe. These companies dominate cloud computing, enterprise software, and AI infrastructure. What makes VGT attractive is its balance between growth and stability. Unlike smaller AI-focused funds, VGT contains profitable megacap companies already generating enormous cash flow. That reduces some of the extreme volatility you get from speculative AI stocks. And because it's a Vanguard ETF, the expense ratio is incredibly low. For long-term investors, this can be a powerful compound growth investment. ETF 3, BOTZ. The third ETF is BOTZ, the Global X Robotics and Artificial Intelligence ETF. And this is where things start getting futuristic. This ETF focuses heavily on robotics, automation, industrial AI, autonomous systems, and machine intelligence. Many experts believe robotics could become a multi-trillion-dollar industry over the next decade. As labor shortages increase around the world, businesses are aggressively investing in automation technology. Factories, warehouses, healthcare systems, transportation. AI-powered robotics are slowly entering every part of the economy. This ETF includes companies like NVIDIA, ABB, Intuitive Surgical, and Keyence. If humanoid robots and automation become mainstream, this ETF could benefit enormously. ETF 4, ARTY. Next is ARTY, the iShares Future AI and Tech ETF. This ETF is specifically designed around the AI megatrend. It combines semiconductor companies, AI software firms, cybersecurity, cloud computing, and emerging technology leaders. What makes ARTY interesting is that it balances both established tech giants and smaller growth companies. That diversification can be important because nobody knows exactly which AI companies will dominate 10 years from now. But one thing is clear. AI spending is accelerating rapidly across the global economy. ETF 5, SOXX. Finally, we have SOXX, the iShares Semiconductor ETF. This is another semiconductor-focused ETF with exposure to major chip companies like NVIDIA, AMD, Broadcom, Intel, Qualcomm, and Texas Instruments. Semiconductors remain one of the most critical industries in the world. And future AI systems may require dramatically more computing power than what exists today. That means the infrastructure demand could continue growing for years. My favorite ETF. So if I had to choose my favorite AI ETF right now, it would probably be SMH. Because semiconductors are still the foundation of the entire AI revolution. Without chips, none of this works. No AI. No cloud computing. No robotics. No automation. Everything depends on computing power. And as AI becomes more advanced, the world will need exponentially more processing power. That's why I believe semiconductor infrastructure could remain one of the strongest investment themes of this decade. Yes, volatility will happen. But long term, this industry could become enormous. So those are some of my favorite ETFs for investing in artificial intelligence right now. Comment below and let me know which ETF you think has the biggest upside potential. And if you want, I can also make videos about the best AI stocks, quantum computing investments, or the next potential NVIDIA. And remember, keep investing simplified.